In this video, I'll show you 7 stocks that I've traded, some paper and some real, in the month of April 2017. Now, strategy remains almost the same chart setups. There are a couple of changes that I've made to the theory based on current market conditions, which I'll discuss over. I'll be discussing 2 charts for every stock, and it would be a 5-minute chart like this and a daily chart. So some of the elements that have changed from my original theory is I'm no longer just looking at top 10 percentage loss NASDAQ and top 10 percentage loss NYSE. I have created a personal scanner, which unfortunately does not work on paper trading. It is only on live trading. You can only build up personal scan trading in live trading. So in my live account, I do have this, and I have made about 15 to 20 scanners. Out of those, I'm only using about 4 scanners, which are for shorting and the rest are for long. Now, in my original theory, one of the screening criteria was the stock has to be below 3 moving averages and the stock should have gap down. Well, I'm still considering stock to be below 3 moving averages. Gap down is only an added advantage. So the first stock is VFC. Volume at about 9:30 Eastern Standard Time was 700,000. 3 red candles. It is not a low dollar stock. Stop loss as usual is always the highest of the first candle, which is 54.73. I entered here on the 4th candle at about $54 and I covered my shot at 53.45, which is somewhere around this area. Looking at the daily chart of VFC, this is the candle we are looking at and it is almost below 3 moving averages. It is not a gap down. Also on my daily chart, I like to see no immediate resistance. The second one is APC with good volume, as you can see the bars here. First 3 red candles. Stop loss would be the highest, 58.88. And I enter on the 4th candle, which is $57.10. And I covered my shot at $56.32, which is here. Looking at the daily chart, this was a gap down below 3 moving averages. Perfect. Now, if you guys are thinking that how I am covering my shot, what is the criteria for covering the shot? Do I have an exit theory? As like my original strategy, I do not have an exit theory. I'm simply looking at price action. I'm looking at the candles and the volume. This one is great, beautiful, heavy volume. Look at the volume on the first 3 candles. The same drill, entering on the 4th candle. Stop loss $22.72. On the daily, it was a gap down and it was below its 3 moving averages. I do not see any resistance around this candle, which is perfect. I enter at $21.96 and I covered my shot at $21.10, which is around this area. Going on to the next trade is QCOM. Look at the volume. Stop loss, highest of the first candle, $53.40. Entry on the 4th candle. So entry was at $52.20 and I also covered my shot at $52.20. At the end, I was even. Why did I not come out here or here? From this point to this point, there wasn't much profit that I'm making. So I just wanted to stay on for some more time. Now let's look at the daily chart of QCOM. It was below 3 moving averages. There wasn't any gap. I do see resistance around this candle. I don't want to see it, but this was the only stock that I wanted to trade on. This one is XRX, Xerox Corp. It was a reasonable volume. 3 red candle, enter on the 4th candle. I entered here and I made a loss and I got out somewhere here. Unfortunately, I don't have a figure on this one, but it was a loss. It was a loss of about 3 to 4%, I believe. Now, the mistake that I did on Xerox was, this is the candle we are looking at. The stock opened below its 2 moving averages. It wasn't a gap down. And also, if you have noticed, it's a low dollar stock. So I want to stay away from such stocks. The next one is Pandora. Reasonable volume. Entry on the 4th, stop loss $11.08. Let's look at the daily chart. So this is the candle. It's below its 3 moving averages. It's not a gap down. And I do see resistance here. Going back to the 5-minute chart, I see a consolidation and the price drops. So I got in at 1077, which is here. And I got out at 1067. Not that much of a profit, but I still made some. And this is Tractor Supply TSCO. Volume was all right. Now on this stock I deviated a little bit because as you can see there are only two red candles. The third one is green. Looking at the daily, this is the candle below three moving averages and it was a gap down, and that particular day I did not find anything, so I thought of going in with this stock. So I entered at $66.20 and I came out at $65.92. And this is my last stock. Actually, this is the eighth stock which I traded today, ABX, and I made a loss. Now, there is nothing wrong with this stock. If you look at the 5 minute chart of ABX, I do see three candles. Let's look at the daily of ABX. I see it's a slight gap down and it's below its moving averages. So what happened? Why did I make a loss? What I believe is it's a popular stock. Look at the daily chart. It has been consistently going down past couple of days. Chances to make good profit today was quite meek. And I'm going to stay away from some of the big names, some of the popular stocks, because traders apply a lot of logic. They do a lot of technical analysis on the stock. So that's it, guys. Thank you very much for watching my videos.